Ankit Agarwal, fund manager at Centrum Broking, is now joining us. Ankit, good afternoon. Thank you so much for joining us here at NDTV Profit. Your view on the Nifty going into 2016, you think it will be a better year for Indian equities?
Yeah, our sense is that in 2015 we have seen weakness in the indices, and if you look at a lot of the global events that were being expected, the Fed rate hike is now behind us. The Parliament session is largely behind us, and in the next year we are expecting that towards the middle of next year, when we could see some revival in corporate earnings on the back of interest savings as a result of the rate cuts that the RBI has given, and move over to marginal cost of funding. With respect to the commodities coming down, we will see the margins, operating margins of a lot of the corporates going up. And also, we expect that probably on a lower base of this year, next year, you could see some revival in the consumption spending also, especially towards the end of next year, when, benefits of the pay commission will also come in. So, all in all, we do expect that, 2016 could be better year for corporate earnings, and as a result, a better year for the markets on the whole.
Would you be overweight on the consumption pack because of the 7th pay commission? The commodity price would benefit. Probably consumers, would earn more, so they would spend more. Is that consumer would be a space to be overweight on despite valuations?
Yeah, so one has to be really selective with respect to what consumer plays we are taking. Probably a little bit more benefit would come in the discretionary space, where the valuations have corrected and could see an uptick. Probably on the consumer staples, we still remain slightly underweight, as the valuations are still pretty high. So our overweight will slightly be more on the consumer discretionary space.
And that would be more towards the AC segments, which have done well. What within the consumer discretionary space?
So consumer discretionary space, one could see some improvements in the consumer, the building material space. One could see some improvement in the consumer durable space also, and that is one area where we believe that uptick can happen. Auto sector again, there some improvement could also come in next year. So I think these 3-4 segments in the consumer discretionary space could do well.
Right. Auto, you mentioned. What do you think of what is happening in Delhi? The way they have banned 2000 plus cc models. You think that's a big risk that the street was not factoring in earlier? The regulatory risk in the auto sector?
Yeah, I think that could be a regulatory risk in the auto sector, specifically with respect to higher polluting perceived vehicles, and as a result, what is happening in Delhi, the risk is probably what the market could be thinking is that what if that risk goes in some of the other cities also. So I think that would be something to be watchful of at this point in time, and we are monitoring the events which are happening in Delhi. And that is one space, which could keep us underweight on auto companies which are heavily focused on the diesel segment. I think one needs to be a little bit watchful of how the regulatory events pan out in Delhi, because that could have maybe an effect on some of the other cities also.
Do you think auto ancillary is also one interesting space which has seen, but selectively it has seen re-rating? You think auto ancillary can re-rate further?
Yeah, auto ancillary, specifically the ones which have now become globally competitive, where India is supplying into the export market. Those companies could continue to do well. Specifically ones which also have a more diversified product basket catering to the replacement segment also. So I think auto ancillary is a good space. We are quite positive on the auto ancillary space, especially the ones which have become now globally competitive and are supplying to a lot of global MNCs, not only domestically but also outside India.
Right. How would you look at the oil marketing companies? Despite the recent run-up, a lot of people believe that it's a consensus overweight. Do you like that theme still, despite the run-up that we've seen in the last 3 years?
Yeah, so definitely you're right that the OMC space has seen a significant re-rating. Although, our sense is that, this sector is highly regulated, and, continuously will be subjected to government regulation. So, we are not too comfortable on how the government would look at, the whole subsidy burden, and, to what extent will we see the benefit that we have seen of deregulation into oil marketing companies going ahead also. So, we would remain underweight on oil marketing companies, specifically because, it is highly regulated, and government intervention in these companies prevents any, high visibility of earnings in this sector.
Right. How would you look at essentially some of the oil names? I'm talking about names like Cain India, Reliance Industries, are basically oil producers. Do you think there is some value emerging over there from a long-term basis?
Yeah, possibly, there could be some value emerging, but, in both the companies, one has to look at, very stock-specific parameters, and can't look at the companies, in an isolation, because there would be other factors impacting the company in both these cases. So, I would not take a generalized call with respect to the commodity fall, but, one has to look at these companies from a more stock-specific basis, and, there could be other factors which could impact stock price performance, crude being one of them.
Do you think the primary market is getting interesting? So, we're getting very niche companies coming in. That could be one theme in 2016. SH Kelkar was a niche company. Interglobe, of course, was one of the biggest airline IPO that we have seen. All the three healthcare companies that are coming in are all different kind of businesses. You think that could be an interesting space? The new startups starting to raise funds, and probably, money managers could take some exposure over there?
Definitely. I mean, the IPO space is throwing up some good opportunities, which one could get into. And, this would lead to re-rating probably of, companies which are probably already there in that particular sector, but were probably ignored in the past. And now they have, come into limelight probably because of valuation rediscovery owing to the recent IPOs. So, yeah, I mean, it does throw up good space. Although, one again has to take a stock-specific view with respect to how these some of the IPOs have been valued, and some of them would leave little scope for fresh investors to come in at this point in time.
Right. Any view on the defense name or the railway name? I mean, very limited opportunity in the listed space, but do you think those are interesting sectors to be in because of the noise that is being made around these sectors over the last 12 to 18 months?
Yeah, I mean, definitely in the railway space, there has been some uptick in activity happening, and there is definitely a conscious effort by the government to push capex in the railway sector. So, we do believe that there could be some opportunities over there. Again, in the defense space, there has been a push by the government on the defense space. So, like you rightly pointed out, the opportunities present in these space are fairly limited. On the listed space. But yeah, definitely there are opportunities available in both railways and defense space that one could look at.
Right. Also about roads within infrastructure or within infrastructure, one has to be very selective with the sectors that they are going on to. So whether you want to do, buy into ports, you want to probably buy into roads, we have to be very, very selective. Maybe a EPC contractor or, various other segments that are there.
Yes, I mean, in case of infrastructure, one has to be quite, selective, and road EPC is one space which has done quite well over the last 1 year, and that is the space where order flows have been continuously good, on the back of a lot of metro rail projects being announced in various cities, and also, a lot of the state governments going in and launching new projects. So, road EPC is seeing a lot of activity happening, and I think that is one of the space in the infrastructure basket which is doing well, and our expectation is that will continue to do well. Another space one, could possibly look in the infrastructure spaces on the power T&D, where, again, there is a lot of investment happening on the, transmission distribution side. Also on the alternate energy, there is a lot of emphasis by the government in the alternate energy space. So I think these three sectors in the broader infrastructure basket could do well and could be outperformers in the years to come.
Right, Ankit, thank you so much for taking out time for us. Always a pleasure talking to you.